Good afternoon, everyone, and thanks for joining us for another Tax Practitioners Board webinar. My name's Lun Lak, and I'm joining you from Gadigal country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I would like to pay my respect to them and their cultures and elders, past and present. To begin, I have a few quick housekeeping messages for you. First, to obtain a copy of today's slides, you can visit our webinar resource hub at tbb.gov.au/webinar-hub. We'll also email you a copy of the slides. Today's webinar counts towards your continuing professional education or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we will issue an attendance certificate to those staying on for the duration of the webinar. Today, we will look at the new Code of Professional Conduct Obligations. We'll discuss the reasons why there are new obligations, the government's transitional arrangements, our consultation process, the new requirements relating to upholding and promoting ethical standards of the tax profession, managing conflicts of interest when undertaking activities for government, and maintaining confidentiality in dealings with government. Then we'll finish with a panel discussion to answer your questions. We have Madeline and Fiona from our policy and legislation team online responding to your questions as we go. So please submit them using the Q&A. We have a lot of people online today, so we may not get to all of your questions. However, we will have FAQs available on our website following the session. Also, a reminder to keep your comments courteous and professional. We will also be turning off the chat once we get going to minimize any disruptions. Now, I would like to introduce our speaker and panelists for today, Kerry Sadek, TBB board member, and Tarek Kumar, TBB's Director of Policy. Welcome, Kerry. Over to you to start us off.
Well, thank you very much, and welcome to nearly 2,000 of our practitioners online. It's wonderful to be here. Good afternoon, and thank you for joining us. This is our final code determination webinar. If you have missed the other 3 sessions, you can access those recordings via YouTube, and we're going to send you those links after the webinar today. It is important to acknowledge that there has been a lot of questions and some concerns in the tax community recently over the government's changes to the Code of Professional Conduct, or what we all know as the Code. So I want to say, I know you may feel like you're being grouped with people who have behaved poorly, but we know at the TPB that the vast majority of you either do the right thing or are trying to do the right thing. So that's the position that we come from. And these additional code items, 3 of those I'm talking about today out of the 8, are largely consistent with existing obligations under the code and the TASA, the Tax Agent Services Act. And what they do is give more specificity to what is already expected of tax practitioners. And as I said, most of you are meeting those obligations already. What I would also add is that these requirements largely mirror the professional standards that are endorsed by the Accounting Professional and Ethics Standards Board. So the APE standards that already apply to anyone who is a member of CPA Australia, Chartered Accountants Australia, New Zealand, and the Institute of Public Accountants. And that will cover quite a few of you online today. So if we move on to our government reform slide, I apologise if you have heard some of this before, but I do think it's important that we set the scene and understand what has driven the change. So I'll briefly cover the background to these changes. Now, it is important to note that the legislative instrument and the requirements contained in the additional code obligations are built on the existing principles of the code. And they include honesty and integrity, independence, confidentiality, and competence. The aim of the additional requirements is to strengthen the integrity and accountability in the tax profession and to create that level playing field. So that means the vast majority of you are likely already complying with the new obligations. And if not, you do have time to amend your practices and processes. And you can also be assured that we are implementing these changes in a pragmatic and practical fashion. Our immediate focus at the TPB is to finalise our guidance products and also to educate tax practitioners so you understand what is required. And that's the purpose of our webinar series. So we want to support tax practitioners genuinely trying to do the right thing. So let's move on and briefly look at the background. So in 2019, the government accepted recommendation 5.1 from the independent James Review. It recommended that the minister be given the power to supplement the code to address emerging or existing behaviours and practices. Then, on the 6th of August, the government announced a significant package of reform to what it called crack down on misconduct and rebuild people's confidence in the tax system and to keep capital markets strong. So that resulted in the government amending the legislation on the 1st of January 2024, so at the beginning of this year, introducing an additional obligation requiring tax practitioners to comply with any obligation determined under Section 30-12 of the Code. So what that provision has done is allow the minister to act quickly by way of a legislative instrument to expand the code if there is a new or emerging issue. Now, we do need to keep in mind that the minister must ensure any additional obligations relate to professional and ethical conduct and are consistent with other parts of the code. Now, we know that the minister has now issued that determination under this power, and that introduces the 8 additional code obligations that we've been talking about to reinforce the high professional and ethical standards expected of tax practitioners. So if we briefly have a look at those new code obligations, as I said, there are 8. If you have had the opportunity to look at our guidance products in draft form, you will see that we've put out 6 guidance products, or 6 drafts. So we have grouped 8 down into 6 products. So those 8 new obligations include upholding and promoting the ethical standards of the tax profession. That's Section 10, and we're going to be talking about that today. Requirements relating to false or misleading statements. Managing conflicts of interest when undertaking activities for government and maintaining confidentiality in dealings with government. That's Section 20 and 25. So 2 separate code obligations that we have grouped into the one draft guidance product. I'll be talking about those 2 today as well. Next, we have keeping proper client records of tax agent services provided. Obligations relating to supervision, competency and quality management under the TASA. And finally, keeping your clients informed of certain matters. So as I said, all of the draft guidance products have been released. I'll talk about that process in a little while. But keep in mind today, we're talking about 3 out of those 8. So moving on to briefly discuss the transitional approach, I do want to make it clear to everyone that at the TPB, we do understand the difference between a large firm and a small firm and what these requirements mean for different practitioners. And that's going to vary according to the size, because we do not expect smaller firms to necessarily implement the same systems and processes as larger firms. However, we do expect that all tax practitioners have appropriate arrangements in place to make sure they are operating in a professional and ethical way. Now, how you meet the existing and new obligations has always and will always need to be determined on a case-by-case basis. And that has regard to individual circumstances. Now, consistent with our approach to our guidance relating to other obligations, we set requirements that apply to all practitioners. Now, how you personally meet those requirements depends on things like your business model, the nature and size of your client base, and the types of services you provide. Now, the new code obligations that we're talking about apply on the 1st of July 2025 for practitioners with 100 or less employees as at the 31st of July 2024. This includes new practitioners under that 100 number that register between the 1st of August 2024 and 30th of June 2025 inclusive. For all other practitioners, the commencement date is the 1st of January 2025. Now, the delayed application date provides time to develop, implement, and update systems and processes necessary to meet those obligations. In terms of the consultation process, to support implementation, we have engaged with stakeholders to develop practical guidance and to ensure we capture any significant issues. And that includes engaging with tax practitioners, the professional associations, and also community representatives. And I've personally been involved in some of those engagement activities. Moving on to the public consultation, which if you haven't been involved to date, you are given the opportunity to be involved now. We've discussed our draft information sheets for public consultation. We're aiming to finalise those in December for the 1st of January 2025 start date. The draft information sheets were released on the 24th of October for anyone to comment on. We need feedback by the 21st of November. So there's still time for you to put your feedback in. You've got a week to go. So if you haven't had the opportunity to look at those, please do. Please provide any feedback that you have. And I can assure you that we consider all feedback received before we finalise the guidance. We're committed to supporting you through this process of change. And our draft guidance has been strengthened by a series of webinars. As I said, this is the last one, and our updated website information. And that includes our frequently asked questions. They're updated when needed. We've been updating those kind of sources of information with the latest information throughout this process. So we have aim to provide a reasonable amount of time for you to understand your obligations, assess your practices, and implement any changes, if required, to comply. So that's very much the background. Let's move on now to have a look at the 3 new code obligations we're talking about today. The first is upholding and promoting the ethical standards of the tax profession, and that's section 10. I'm going to take a high-level overview of that section and work our way through it. So under section 10 of the determination, registered tax practitioners independently and in cooperation with each other are obliged to do 3 things. First, uphold and promote the code. Second, not engage in any conduct that they know or ought reasonably know may undermine public trust and confidence in the integrity of the tax profession, or undermine public trust and confidence in the integrity of the tax system, so the profession and the system. And thirdly, not engage in any conduct that they know or ought reasonably to know may undermine the collective work of registered tax practitioners as a tax profession to uphold and promote the code, public trust and confidence in the integrity of the tax profession and tax system, and each member of the profession being accountable for their own conduct. Now, if we look at those three requirements, in practice, how you meet the obligation to uphold and promote the code will depend on your circumstances, including, again, as I've said, the size and nature of your practice, the degree of authority and control of an individual within the firm. Generally, you can demonstrate compliance by ensuring your own compliance with the code on an ongoing basis, and by taking reasonable steps to implement practical measures to uphold and promote the code in your practice. Now, you'll notice when I read out the second and third elements, I talked about know or ought reasonably to know. And that's know or ought reasonably to know that your conduct may undermine public trust and confidence in the integrity of the tax profession or tax system. So that phrase has two elements. The term know refers to actual knowledge. So what do you actually know? While the phrase ought reasonably to know extends to constructive knowledge, where a person is taken to have knowledge about their conduct if the existence of that conduct could be discovered by a reasonable person in the same position as the person making the inquiries. So the relevant factors in determining whether a registered tax practitioner ought reasonably to know in any given scenario will again always depend on the circumstances and are considered on a case-by-case basis. So what about services provided collectively? Section 10 that we're talking about now recognises that a tax agent and BAS services are often provided collectively by multiple people within the organisation, working in cooperation with each other. Importantly, registered tax practitioners, so the tax and the BAS agents, are responsible for the conduct of any unregistered individuals, such as employees, contractors, and any other assistants providing tax agent or BAS services on their behalf. The requirement also encourages a tax profession with high ethical values that does not engage in misconduct, that does not turn a blind eye to misconduct, and does not shy away from taking action against the misconduct of another registered tax practitioner in order to maintain public trust and confidence in the tax profession and system. When we go through our example, you'll see a lot of those elements come out. So Section 10 of the determination also applies to tax practitioners in any professional role. This recognises that all registered tax practitioners play an important role in upholding an ethical tax profession and system that the public can trust and rely on. So I said we were going to have a look at an example. Let's move on to our first case study that we're going to look at here. Now, case study 1, I know you can all read, but I'll run through it briefly with you. Anne is a director of a tax agent company. Crunch the numbers. She is approached by an employee of the company, James, who works solely under Lachlan, one of the company's supervising registered tax agents. James has concern about Lachlan's potentially unethical conduct. James claims he's seen Lachlan providing tax agent services to clients without asking for any proof of identity documentation to verify their identities. He also claims Lachlan has exaggerated claims on behalf of clients in their income tax returns to ensure they all receive substantial tax refunds. James raised these concerns previously with Lachlan, but they were disregarded. Having discussed this matter, Anne checked the client files and found evidence of the claims James had raised with her. She was immediately concerned with how this would look for the company if James raised any of these matters further. Anne subsequently met with James and advised him not to question Lachlan's work and asked James to refrain from pursuing these types of matters. Anne also adds that if James continues to raise this issue, it would be detrimental to his future career in the company. She then deleted her email communications with James discussing these issues and continued to employ Lachlan as a supervising agent. Now, I don't think I need to ask for a thumbs up here for everyone to understand that there are issues. The TPB later investigated Lachlan's conduct and found he and Crunch the Numbers had breached the determination for making false and incorrect statements to the Commissioner of Taxation when they ought to reasonably have known that the statements made were false in material particulars. Lachlan and Crunch the Numbers also breached the TASA for failing to provide services competently and for failing to take reasonable care to ascertain their clients' affairs. So our outcome here, in relation to Section 10 of the determination, which we've just discussed, Crunch the Numbers is in breach for engaging in conduct that undermines the collective work of the profession, given the company did not hold its supervising registered tax agent, Lachlan, accountable for his actions. So again, it goes back to being proactive, as I said initially when we were running through Section 10. In making this finding, the TPB would note the company failed to remove or discipline Lachlan, where there were reasonable concerns about potential unethical conduct relating to his work, asked not to be informed of the behaviour, did not record appropriate records and destroyed evidence relating to potential breaches, and threatened adverse action against James when he raised concern about potentially unethical conduct. So that brings me to the end of our discussion around Section 10. We can get back to that in question time if people have questions around anything I've said there. Let's move on now to have a look at Section 20, which deals with managing conflicts of interest when undertaking activities for government. Again, I'm going to take a high-level view of Section 20 on this code item. So if we look at Section 20, it requires you, in relation to any activities you undertake for an Australian government agency in your professional capacity, to do three things. Take reasonable steps to identify and document any material conflict of interest, whether real or apparent, in connection with an activity undertaken for the agency. Secondly, disclose the details of any material conflict of interest, again, real or apparent, identified in relation to the activity undertaken for the agency to the agency as soon as you become aware of the conflict. And thirdly, to take reasonable steps to manage, mitigate, and where appropriate and possible, avoid any material conflict of interest, real or apparent, identified in relation to the activity undertaken for the agency. Now, the idea of this obligation is to assist in minimising potential adverse impacts to government agencies where a tax practitioner has a conflict of interest in connection with an activity undertaken for that particular agency. Now, keep in mind, this won't apply to everyone. It only applies if you are interacting with government in your professional capacity. So you do need to think about whether it actually applies or not. Now, like Code Item 5, this particular obligation does not prohibit you from having conflicts of interest. What it does is create an obligation to appropriately manage and mitigate any conflicts of interest that arise in relation to those activities undertaken for a government agency in your professional capacity. Now, it does need to be recognised, however, that in some cases, no matter what arrangements are put in place, conflicts will be unmanageable. And the only way to adequately manage and mitigate any material conflicts of interest is just to avoid them altogether. And that is generally going to require the practitioner to decline the engagement. Otherwise, the continued engagement by the government agency of the practitioner will be at the discretion of the agency, having regard to that nature of the conflict and those steps taken to manage and mitigate the conflict. Now, as I've said, and I want to stress it again, this obligation only applies if you are engaged by an Australian government agency to undertake activity for that agency. If you're not undertaking an activity for an Australian government agency, the obligation simply doesn't apply to you. So let's look at another case study and have a look at the example that shows you how you can demonstrate, or how we demonstrate these concepts. So moving on to case study 2, again, I'll briefly go through the facts and you can have a look at them on your screen. In this example, we have John, who is our registered tax practitioner, and he's an expert in Australian superannuation law. So John is engaged by an Australian government agency to provide advice in relation to a proposed superannuation reform package. And that reform package is aimed at improving fairness, sustainability, flexibility, and integrity of the superannuation system. And the proposed reforms are intended to apply to all superannuation funds. Now, John's Australian, so he's going to be a member of a superannuation fund. Turns out John is a passive member of the 123 super fund. So although John identifies that there is a conflict of interest, given he's a member of a superannuation fund that will actually be impacted by any proposed reform package, he assesses this conflict as one that is not material in the circumstances. Nevertheless, John documents and discloses the conflict to the government agency. So here, I'm going to ask you, thumbs up if you think John has met his obligations, or a surprised emoji if you think he has not. And wonderful, I'm seeing lots of thumbs up coming across the screen. So love seeing all the interaction here, someone speaking online. Thank you. So in this situation, it is safe to say John has met his obligation under Section 20. Although he identified the conflict of interest in connection with the activities he is undertaking for the government agency is not material, he has nonetheless documented and disclosed the conflict to the government agency. But even if John had not disclosed the conflict to the agency, he would not have breached the determination given the conflict was not material. Okay, so that's our second obligation that we're working through today. Our final one that we're going to work through today is maintaining confidentiality in dealings with government, and that's Section 25. Now, as I said, if you've had the opportunity to look at our draft guidance products, you'll know that we've grouped 20 and 25 together because they're obviously highly related. So the confidentiality in dealings with government, Section 25 requirement, has 2 obligations to consider here. Subject to some exceptions or there being a legal duty to disclose, the obligation is first not to disclose any information received directly or indirectly from an Australian government agency in connection with any activities undertaken with that agency in your professional capacity. And second, you must not use any information received directly or indirectly from a government agency in connection with any activities undertaken with that agency in your professional capacity for your personal advantage or for the advantage of an associate employee, employer, or client. Now, what this obligation is intended to protect against is the unauthorised disclosure and improper use by registered tax practitioners of information they obtain in relation to activities they undertake with a government agency. So again, that's that link if you're doing work with a government agency. If not, it's not going to be relevant to you. So what do we mean by disclosure to a third party? So a tax practitioner may not disclose information in connection with activities undertaken with a government agency to a third party without the government agency's agreement, or if there is a legal duty to disclose the information. So they're the exceptions. If there is no legal duty to disclose the information, you will need to consider if disclosure was authorised by the government agency and that any future disclosure was done consistently with the agency's authorisation. Where you do intend to disclose information to a third party in connection with any activities undertaken for the government agency, what we recommend is that prior to any disclosure, you clearly inform the government agency that there will be such a disclosure and you obtain that government agency's permission. So what do we mean by that permission? That permission may be in the way of a signed letter outlining the information that is to be disclosed and to whom the information is to be disclosed. Signed consent or some other kind of communication from the government agency. But in all cases, the relevant communication should outline the disclosures to be made, as well as information about the entities that will have access to the information. But ultimately, you should use your professional judgment to assess if the further disclosure of the information was authorised, having regard to the circumstances. Okay, we're going to go through one final case study before I hand over to all of you online to give you the opportunity to ask us some questions. So moving on to our third case study, this time we have Thomas. And Thomas is a registered tax agent and tax practitioner at a mid-size accounting firm. Thomas was invited to a set of confidential roundtable discussions led by Treasury in relation to a proposed increase to tax rates that would largely impact high wealth individuals. The proposed increase in the tax rates would impact a large portion of the firm's client base. The invitation to participate in the roundtables sets out the proposed terms of the engagement, including to whom information received in connection with any activities that Thomas is to undertake may be disclosed. So the information is all set out for Thomas. The terms make it clear that a core group of expertise within the firm could be established to participate in the roundtable discussions and any other dialogue in relation to the proposed tax rate hike, but that the information could not be disseminated further. So what Thomas does is ask two of the firm's partners to participate in the engagement, and this is communicated to and authorised by the Treasury, Treasury being the government agency. Throughout the engagement, Thomas discloses the information to the two partners and no further disclosure of the information occurs. So again, I'm going to ask you for participation. Let's give us a thumbs up or a surprise to show you your thoughts. Do you think there is a breach in this case. Those thumbs up if you think Thomas has not breached Section 25. And fantastic, everyone's still awake online and giving me lots and lots of thumbs up. So it looks like we have this one right. Thomas has not breached Section 25. It's perfectly reasonable to conclude the information received in connection with the activities Thomas has undertaken for Treasury was authorised by the department to be disclosed to the core group, noting the proposed terms of engagement. In addition, Thomas and the core group did not disclose the information further. So that brings me to the end of everything that I want to say, and I've left lots of time for questions and interaction. So I'm going to leave it there and hand back now to Julie for some questions. And I understand Tariq is also going to join me.
That's right. Thanks so much for all that great information, Kerry. I think that's answered a lot of the questions, but we do have some other questions that have come through. So I'll address those to you and Tariq today. So Tariq, I might just begin with you. When Kerry was talking in the presentation today, she spoke about upholding and promoting the code and mentioned implementing practical measures in your practice. Would you be able to give us some examples of what practitioners can do to implement those?
Thanks, Julie. Good question. So there's a number of measures you can take that in these circumstances. One of the things is providing training and resources on complying with the code. Another one is, introducing and actively undertaking processes to manage underperformance, and then maintaining appropriate records for breaches of the code. There's probably another 6 or 7 bullet points there. You probably want to look at our guidance there for a full list of practical measures, but there's some examples of things you could do.
Great, thank you for that, Tariq. And as Kerry mentioned, we will send everyone a copy of all of the guidance that we've talked about today and the guidance that is in relation to the other obligations under the determination as well. So stay tuned and we'll send that out soon. Kerry, I've got another question now about upholding the profession and the tax system. So when it comes to engaging in conduct that undermines the tax profession and the tax system, what would the TPB consider a breach of the code?
Yeah, great question, Julie. These are the issues that I covered in the example. So I think it's worth, going back and reflecting on that and maybe summarizing the issues that came out of that example that I didn't have the opportunity to do. So the kind of factors that we would consider as likely evidence of a breach are things like, not removing staff from a project or work area where there are reasonable concerns about potential unethical conduct relating to the project or the work area. Or, in our example, asking not to be informed of, or, for appropriate records to be made of, the information relating to the potential breaches of the code. Destroying evidence. We saw emails in that example being destroyed or deleted, so we would look at that. Taking or threatening any adverse action against an individual who raises concerns about potentially unethical conduct. And you'll remember that also came out in the example. That example was packed with a lot of information. But finally, I think as well, rewarding or encouraging an individual in relation to conduct that is unethical or not discouraging such unethical behaviour would be a real concern.
Thanks, Kerry. That's some really good clarifying points there. Tariq, I've got a question now from Deborah, and she's wondering about the disclosure when interacting with government agencies, and she is curious, does that involve the ATO?
Thanks, Julie. Yes, it does. So when you're talking about Australian government agency, like if you're looking at the definition of that, it includes any Commonwealth. I saw another question come in as well. So it includes Commonwealth or state agencies or any authority under that agency. So it's not limited to Commonwealth agencies. Obviously, the ATO is a Commonwealth agency, so it will include the ATO, but yes, any Commonwealth or state agency.
Great, thank you so much, Tariq. Kerry, I've got a question now asking, can you outline what the TPB would consider reasonable steps to identify and document material conflicts of interest?
Sure. And when I was talking about, material conflicts of interest, we talked about documentation and, the difference between small firms, medium and large firms. And that's certainly come up in a lot of discussion we've had with our stakeholders. So that issue is actually addressed in our draft guidance for anyone who wants to go and have a look at that. But essentially, whether you have taken reasonable steps to identify and document a material conflict of interest will be a question of fact, having regard to particular circumstances. So then it comes down to you go, well, what are the relevant factors that you would be considering as a tax practitioner? So what would you consider? You'd be looking at the size of the entity. I think I've stressed that. That's important. The type of work undertaken also should be looked at. Client base, who are the clients? The likelihood of conflicts of interest arising. Things like the sensitive nature of the activities undertaken for the government. How sensitive are they? And we saw with our example again of someone advising around superannuation. It was a very broad kind of process of seeking consultation. So we'd also look at any possible adverse consequences for the government agency. Things like also we look at relevant training to staff and establish procedures for the disclosure and record keeping of potential conflicts of interest. And it goes back to that, keeping records of what's happening and how things are documented. Finally, you'd look at whether you have established procedures for identifying and documenting conflicts of interest. As I said, that documentation is really important.
Great, thank you for that. Tariq, while we're just on the topic of the material conflict of interest, I've had a few people ask if we can explain exactly what is considered a material conflict of interest. Could you give us some advice on that?
Yeah, sure, Julie. Very good question. I saw that there was a number of queries on this topic around materiality. Unfortunately, there's no checklist type answer to this question. As Kerry alluded to in the earlier question, again, it's a question of fact. You have to look at the circumstances of the case, the transaction, etc. But it has to be of substantial import. It has to be of substantial consequence. It's not something that's going to be minor or trivial. But ultimately, it will require the tax practitioner to exercise their professional judgment in the circumstances, having regard to the matter that they're dealing with. And when you're dealing with materiality in terms of government agency work, you have to look at the potential consequence for the government agency and would it be material in terms of if the wrongdoing was done. But there's some broad ideas of how that materiality test works, Julie.
Thank you for that, Tariq. Kerry, while we're on the topic of conflicts of interest, we've had a few questions about this as well, and just wondering how a tax practitioner can safely manage and mitigate a conflict of interest. Could you give us some information on that?
Yeah, absolutely, of course. Yeah, a very, very sensible question from our audience. So, yeah, it's about taking reasonable steps to manage and mitigate a conflict of interest. So how do you do that? Assess and evaluate the conflict of interest, the obvious starting point. But once you've assessed and evaluated any conflict of interest, implement appropriate mechanisms to manage and control the impact of the conflict of interest on your advice or decisions of the government agency. And then make sure you implement appropriate mechanisms to mitigate that conflict of interest. So what are some examples of the kind of things you could do? Make sure you enforce procedures within the firm for managing, mitigating, and avoiding conflicts of interest. Sensibly allocate staff to projects in a way that manages or avoids potential conflicts of interest. So if staff have conflicts of interest, don't allocate those staff with conflicts to certain projects or tasks. Or by allocating staff with conflicts of interest to work on initial identification and analysis of the issues, but having staff without conflicts of interest reviewing that analysis and making the final decisions. Also, practitioners will perhaps have internal governance policies in relation to conflicts of interest that include consequences for failing to comply with those procedures. And I think rather sensibly, another example of what practitioners could do is maintain a conflict of interest register and inform and information handling procedures that utilize technology to limit information access to those with a legitimate need to know. And again, maintaining that register and the information handling procedures is something that a lot of our practitioners would already be doing, and they're just sensible, pragmatic steps that people can take.
Thanks, Kerry. That's some really good steps to take, I think. We spoke about as well today about personal advantage. I'm just wondering if you can explain what we mean by that in particular. Kerry, I'll put that one to you. Thanks.
That one to me?
Yep.
Okay, so around what we mean by personal advantage?
Mm-hmm.
Yeah, so the TPB's view is that a practitioner, much like a director or other officer or employee of a corporation, is in a position of trust and confidence when engaging with a government agency. So any confidential information obtained from the agency in connection with activities you undertake with the agency in your professional capacity that is used for the purpose other than the purpose for which it has intended would be considered to have been used for your personal interests. So it's quite broad in that sense of what we would consider something being used for personal advantage. So what that means is that it's not necessary that the use of information has likely or guaranteed to result in a personal advantage. The mere possibility is actually going to be enough. So, the mere possibility that the information has the potential to result in a personal advantage is enough to trigger the obligation. I think people should remember that. The other thing I do want to emphasize there, Julie, I think it's pretty obvious, but worth noting, is that it's not necessary that the advantage or benefit gained be characterized in financial terms. So it's much broader than just financial advantages or benefits. So hopefully that answers your question.
It does, thank you. Yeah, and that's a good point to add, I think, as well. Just, I guess, on the same sort of topic, Tariq, I just wanted to ask as well, is it okay to share government information with employees if they keep it confidential and don't use it for their personal gain?
Yeah, thanks, Julie. Good question again. The short answer is no, it's not okay unless you've got the agency's authorization. So when you're dealing with a government agency, they will set out the terms of the information that they're disclosing to you, and in that it will contain information as to whether or not further disclosure to your staff or employees is permitted. That might be expressed or implied, but unless you have that authorization, no, you cannot disclose that.
Great, thank you for that. The next question I've got, Tariq, is about documentation and evidence. Just wondering if the TPB has any guidance on how much information needs to be kept. Is there too much or too little for tax practitioners to be recording?
Yeah, good question, Julie. It's probably a broader issue in terms of record keeping. So, as part of the code determination that was introduced, Kerry spoke about the 8 new items. One of them is to deal with record keeping, requiring practitioners to keep records of tax agent services provided to clients and former clients. So probably encourage you to look at that guidance products, which sets out in detail what practitioners' record keeping requirements are. But broadly, you keep a record of, anything that, file notes and other information that you've relied on for the purpose of providing a service, and it's generally for 5 years. So that's a broad overview, but please look at the record keeping guidance for further information.
Thanks, Tariq. Kerry, in the webinar, you spoke about certain situations where further disclosure of government information was allowed. Do you think you could give us some examples of what types of situations this would include?
Sure, Julie. So yeah, it's a really good question. We talk a lot about what you can't actually disclose, and then the question is what you can disclose. So it is reasonable to conclude that further disclosure is authorised in certain circumstances. So that would be where there are no communications from the government agency indicating the information has been supplied in confidence. So there's no confidentiality agreement, etc. Where the reproduction or disclosure is somehow qualified. Thirdly, the information is not protected under the law from disclosure. Or maybe it is not generally accepted that the information of this type or nature would actually be held in confidence. It's understood that this normally would be publicly available information. So very broad examples. Great question because it flips it around. But I think there's some circumstances where we go, yep, the government hasn't said that this is confidential. We've done a reasonable assessment, and we understand that disclosure is actually permitted.
Great, thank you so much for that. I think we've probably got time for a couple more questions, and then I might just go to both you, Kerry and Tariq, just for some sort of closing thoughts and any key tips that you might have. So the first one I've got here is from Norman. So Tariq, I might ask this one of you, and it's just saying, as accounting professionals, how should we proceed if we identify non-compliant behaviour in a client and they refuse our efforts to address it?
Yeah, thanks, Julie. I think first it's important to point out, registered tax practitioners operate in a regulated environment. They're bound by the Code of Professional Conduct. So as part of that, you have to advise your client of their rights and responsibilities under the taxation laws. So that's probably the first step. You provide the advice. You advise them what's in accordance with the tax laws and what's not. Now, if they continue to maybe not take that advice or act in an unlawful way, you'd probably want to consider your ongoing engagement with that practitioner, with that client, and whether or not, you can continue to service that client and discharge your obligations as a practitioner under the, tax agent services regime. And then finally, I would just note, if you're dealing with false or misleading statements, then that triggers an additional obligation under the new code determination to, take certain steps. And, if certain conditions are met, then you might need to report that to the TPB or ATO. But start with advising your client and go from there.
Thanks, Tariq. And lucky last question for today comes from Greg. And Kerry, I'll ask this one of you. It's just asking, is unauthorised disclosure of confidential government information a criminal offence?
So good question. I might hand over to Tariq to see if we want to comment on that or take that as something we provide further guidance on.
Yeah, that is a good question. It's not a criminal offence under our regime. We only operate the Tax Agent Services Act and related legislation, so it doesn't form under that, but it certainly could be under other Commonwealth legislation. Unfortunately, that's just not our area of expertise, but there's certainly a possibility it would form criminal matter as well, but it's not a criminal offence per se under our legislation.
Thanks, Tariq. Okay, so I think that's all the time we've got for questions. So, Kerry, I might just go to you if you've got any closing remarks that you'd like to share.
Sure, Julie. Look, first of all, I'd like to thank everyone for coming online. It's brilliant to see so many of our tax practitioners engaging so productively in our webinar series. And I do want to remind everyone that we do take a pragmatic and practical approach to this. You will have seen that come out over the last hour and the way Tariq and I have answered questions. But I do think it's also important for our practitioners to remember that most of them are actually already complying with the code obligations. So it really is a case of just looking at their practices, their procedures, their documentation, etc., to make sure that everything is up to date.
Thanks so much, Kerry. And Tariq, did you have any closing remarks?
Yeah, just want to reiterate the comments Kerry made earlier around the confidentiality and conflicts of interest obligation. They're limited to those activities undertaken with for government, so it probably have very limited application for the majority of tax practitioners. Now, that doesn't mean that there's existing obligations under the code around confidentiality and conflicts of interest. They'll still apply. So if you're already complying with those, you'll go a good way towards complying with any additional obligations in that regard. And then finally, I'd just say again, we've published 6 exposure drafts dealing with these 8 new obligations. This is really the opportunity for the practitioner community to have their say and shape that guidance. If you think that there's gaps in the guidance or you require some further information, please read it and provide your submissions. I think there's about a week left, so get in there and have your say.
Well said. Thank you. Thank you both. And just now to finish up, I wanted to share some information on how to stay in touch with us so that you hear all the latest information. So we, as we said today, have our website, which is tpb.gov.au. There is a wealth of information on there, so I encourage you to have a look at that. You can also follow us on socials on LinkedIn, Facebook, and X. That's where you'll get the most up-to-date information, and we'll be putting reminders up there about the consultation and also letting you know when we've concluded that and when the guidance has been finalised. So also highly encourage you to subscribe to our newsletter, which is TPB e-news. That goes out each month, and if you'd like to subscribe to that, you can go to tpb.gov.au/newsroom. You can also subscribe to our YouTube channel, and if you do so, you'll receive notifications when we post new videos. And as I'm sure you know, we do record all our webinars, so we have a really comprehensive library available on YouTube, and you can view those videos at your leisure. And the good news is you can still claim continuing professional education for viewing the videos there. I just want to say a big thank you to Kerry and to Tariq today for your great insights, and thank you to Madeline and to Fiona as well for assisting with the questions today. And just one final thing for us before we do finish up, we'll be launching an exit survey, and we would really appreciate it if you could take the time to complete it. It's very quick, just takes one moment of your time, but it is really valuable to us. It gives us some great ideas on where we can improve our webinars, and also if there's a topic that you want to hear about, let us know and we will try to add that into our webinar program for you as well. So the survey just opens up in your browser when you leave the webinar today. And once again, thank you so much for joining us, and we do hope to connect with you all again soon. Thanks everyone. Enjoy the rest of your day. Bye.
Thanks everyone.